I wish I had started sooner. If we had, we'd be in a much better position. In this video, I'm going to cover a proven 3-step system to secure your retirement plan in the new year. So whether you're watching this in December or January or sometime in between, and you're ready to get your finances and retirement under control and to the next level, by the end of this video, you'll have the framework you need to ensure you have a solid game plan for retirement. Hey there, I'm Anthony Saffer, CEO and financial advisor here at 1 Degree Advisors, and I'm here to help you gain confidence in your retirement. So why now? Well, let's be honest, spending time on your finances isn't something most people enjoy. Unless you're a finance buff like me, you may not want to dedicate hours digging into the finer details of your retirement plan to ensure you won't run out of money and can maintain dignity and independence in retirement. This is often because you might not know where to start. The idea of planning for retirement seems overwhelming, or you're afraid of what you'll find out, like perhaps realizing you're not on track. Now you have 2 options: do it yourself or hire someone and delegate to a professional. Look, there's no right or wrong answer, but I suggest you be realistic with yourself. Both do-it-yourselfers and delegators, people who hire professionals, can be successful. But whatever you choose, don't procrastinate. It's time to get started, and it's not as treacherous as it might seem. This brings us to the first step in our proven 3-step system. Imagine you're planning a road trip vacation across the United States to visit the great national parks. The first question you need to answer is, where are you leaving from? In other words, where do you currently live when you embark on your trip? You can't possibly know the first freeway to take or the initial national park to visit to make your trip efficient if you can't even answer the question of where you are right now. The same principle applies to your finances. The first step is to take stock of what you own. This includes all your resources such as 401ks, other retirement accounts, pensions, real estate, bank account balances, and so on. Next, evaluate everything you owe, your debts. This includes items like mortgages, car loans, and credit cards. Hopefully, if you're looking to retire soon, you don't have any credit card debt, as we've previously discussed why entering retirement with credit card debt can be so dangerous. Lastly, assess all your current income sources and potential future sources, such as Social Security or pension. I want you to list out everything on a piece of paper, everything you owe, everything you own, and all your income sources, so you can see it in front of you. Once you've done that, you've created your net worth and your income statement, which is a crucial first step in the 3-step system. Okay, move on to the second step in our system. Going back to our national park vacation example, once we understand where you're leaving from, the next step is understanding where you want to go. What kind of national parks do you really want to see? Do you want to visit more desert-type parks, mountainous areas, or just be along the coast? Step 2 in our system is understanding what you want your retirement to look like. What do you want to spend in retirement? We've created a really helpful spreadsheet that helps folks quickly and easily understand their spending without having to dive into a formal budget. The beauty of it is that it only requires you to know a few numbers. Number 1, all your current income, salary, business profits, rental income. Number 2, what you save each year, things like 401k deferrals, contributions into other investment accounts, savings into your bank account. 3, what you spend on taxes, which you can estimate by looking at your tax return, and what you pay in property taxes. Number 4, what you pay on debt, such as mortgage or any other loans. Number 5, what you spend on insurance premiums, such as life insurance or medical insurance. And then 6, what you give away each year, either to charity or other people. Once you subtract all these items from your total income, what you're left with are your living expenses. This is crucial to know for retirement because most people want to maintain the current standard of living expenses they have now. Few want to go backwards in retirement. To assist you with this calculation, we're providing a free copy of our spreadsheet in the description below. As a thank you, please consider subscribing. It's absolutely free and we would appreciate it. We believe this approach is a much better and more accurate alternative to formal budgeting, especially for understanding what you need to spend in retirement. Back to our example. Now that we know where you're leaving from and we know where you want to go, we can actually map out your vacation. We can create your retirement plan of action. Now, this is the part that most people get stuck because it's where the rubber really meets the road. But the good news is I'm going to walk you through the 4 main components every successful retirement plan of action contains. Okay, the first component is retirement income. Here we create a plan of action for when you'll begin Social Security, considering all the different impacts of delaying benefits, when you'll receive your pension if you have one, and most importantly, how much income you'll need each month in your bank account in retirement to meet your needs and live the life you want. You'll also list out how much more you may need to save to make sure you can maintain your standard of living in retirement. Okay, the second component is taxes. This section is critically important because taxes will likely be your biggest lifetime bill. Here you strategize ways to reduce your lifetime taxes, such as through Roth conversions, including how much to convert. If you give charitably, how could you give and increase your tax savings, such as through gifting appreciated assets or taking advantage of qualified charitable distributions. If you're in a low enough tax bracket, also how much capital gains could you recognize to take advantage of a 0% rate? List out all your tax strategies here. Now, we use advanced tax software to examine and uncover unique ways for folks to lower their tax bill. But even if you don't have complex software, thinking intentionally about what your tax situation looks like now, and then what it'll look like in the future, and then creating a plan to save taxes will benefit you immensely. The third component is risk management. We can do all this great planning, but if you pass away early and your family's left vulnerable, then all the planning is for nothing. So have a game plan for life insurance and disability insurance. Also, look at what would happen if you incurred a long-term healthcare event later in life. What could you do to ensure you maintain your dignity and your independence throughout retirement? You'd also want to look at your estate plan along with beneficiary designations on your accounts to ensure it's all aligned and matches your wishes. Okay, the fourth and final component is your investment plan. And yes, investments are listed last on the retirement plan of action for a reason. Too often people start with their investments first, and in my experience, that's a massive mistake. Starting with investments first is a lot like ready, fire, aim. Before you can know how to invest, you need to know what you're investing for. Under your investment plan component, you'll list out your investment strategy for your accounts, considering how much will be invested for the long term to grow your wealth and beat inflation, and then how much will be more conservative to create that stability and help create income in the early years of retirement. You'll also consider the tax type of each account, such as IRA, Roth IRA, and non-retirement or brokerage accounts, and how each account should be invested to take advantage of their respective tax characteristics. Now, the beautiful thing is if you've done your retirement plan of action well and in bullet point format, it should be no more than 1 page, maybe 2 pages if you're very detailed. And this retirement plan of action is now your North Star for financial decisions and keeps you accountable to get things done. Now, if you're seeing all this and it's sounding overwhelming or you simply don't have the time to do it right, that's not a problem. This is what we do all day, helping folks to achieve a successful retirement. The added benefit is that we take your retirement plan of action and plug it into planning software to visually show you if you're on track. And if not, suggest adjustments and strategies you should make to increase your chances for success. If you'd like to learn more, give us a call or visit our website. All our contact information can be found in the description below. To see how a retirement plan works in action, I've created another video where I break down a couple's retirement plan. This couple had $3 million, but were told they couldn't retire. And after a few simple adjustments, which are discussed in this video, they were able to retire with confidence. You can watch that video above. Once again, this is Anthony Saffer, CEO and financial advisor here at 1 Degree Advisors. Thanks for watching, and we'll catch you on the next one.